Assalamu alaikum. In this video, I will explain the recording of transactions related to withdrawal of a partner. A partner cannot be prevented from withdrawing from partnership as partnership is a voluntary association of two or more people. It is assumed that partners mutually agree to withdrawal such that withdrawing partners can sell his interest to an outside party or withdrawing partner can sell his interest to remaining partners. The remaining partners pay the withdrawing partner his share from the firm's assets. In accounting, the assets are recorded at book value. At the time of settling the retiring partner's capital, the first thing to do is to re-evaluate the assets of the firm and adjust all partners' capital accounts accordingly. This means that their capital will increase in their profit sharing ratio if the re-evaluated value of assets increases or decrease if the value of assets decreases. And then the payment is done to the retiring partner. Payment to the retiring partner can be done either by bonus method or by goodwill method. In bonus method, the retiring partner is paid more than the book value of his capital balance and the remaining partners are charged with the amount of the payment. Goodwill method is used if existing partners will not agree to reduce their capital balances. Partnership agreement specifies how withdrawal is to be recorded, or partners agree that intangible should be recognized. I strongly believe that we learn more by watching an example rather than hearing about the concept. So let's do an example on withdrawal of a partner. Nabiha, Abdullah, and Samina are partners with capital account balances of 50,000, 75,000, and 45,000 respectively. Income and losses are divided in a 4:4:2 ratio. Samina decided to withdraw. The partnership revalued its assets from 225,000 to 250,000, which represented an increase in the value of inventory of 5,000 and an increase in the value of land of 20,000. Samina was then given 15,000 cash and a note for 50,000 for her withdrawal from the partnership. Now, when Samina retires, the remaining partners, Nabiha and Abdullah, will share profit or loss equally. Prior to the withdrawal of Samina, the accounting equation will look like, let's see how it looks like. The total assets are 225, Nabiha's capital is 50, Abdullah's is 75 and Samina's capital is 45. So the balancing figure is 55,000 and the total is 250,000 and this is equal to the liabilities plus now Nabiha's capital of 60,000, Abdullah's capital of 85,000 and Samina's capital of 50,000. And you can see that the total of assets is equal to the total of liabilities, that is 250,000. You can see that we have allocated the re-evaluation of inventory and land. The value of inventory has increased by 5,000 and land has increased by 20,000. So the total increase is 25,000 and this is allocated to the three partners in their profit sharing ratio of 4:4:2. Prepare the journal entry to record the revaluation of the partnership assets, and prepare the journal entry to record the withdrawal using the following independent methods: bonus method, partial goodwill method, and full goodwill amount method. First of all, we go for the revaluation, and because the value of assets has increased, so inventory and land are debit and the three partners capital account are credited by this amount in their profit sharing ratio. Now prepare the journal entry to record the withdrawal using the bonus method. Samina was given 15,000 cash and a note for 50,000 for her withdrawal from the partnership. The 50,000 note means that the firm has accepted to pay a loan of 50,000 for which Samina was liable to pay and not the firm. So she is paid 15,000 cash and there is an increase in liability for the firm by 50,000, and Samina's capital was 45,000 and 5,000 increase was because of the revaluation of the assets, and the difference of 15,000 is allocated among the remaining partners in their profit sharing ratio. Now, prepare the journal entry to record the withdrawal using the partial goodwill method. Now, Samina is paid 65,000 and this amount is more than her capital balance that was 50,000. The excess amount paid to her is recorded as goodwill under the partial equity method, as other partners are not affected in this method. In the second journal entry, we close Samina's account by debiting her capital account by 65,000. You can recall that her capital balance was 45,000 and her capital increased by 5,000 on revaluation of assets, and obviously the remaining 15,000 is the goodwill. Let us see how the accounting equation will look like. Again, we have the total assets of 225,000. Nabiya's capital is 50 and Abdullah's capital is 75 and 45. So the balancing figure of 55,000 is the liability. On revaluation, there is an increase in assets by 25,000 and this is allocated among the three partners in their profit sharing ratio. Now, since there is a goodwill, so that means there is an increase in goodwill in asset by 15,000, and under the partial equity method, this will be allocated to the retiring partner, that is 15,000, and now we can make a total. $265,000. This is equal to 55,000 plus 60,000 plus 85,000 plus 65,000. And now we have paid cash. So there is a decrease in asset by 15,000 and we have accepted Samina's liability of 50,000. So our liability increases by 50,000 and we settle her account of 65,000. Let us see the total now. And and that is 250,000 is equal to 105, 60,000, 85,000, and this amount becomes 0, and if we make the total of this is 250,000. So that's how the equation is going to be balanced. Now let us go to the next example. Prepare the journal entry to record withdrawal using the full goodwill method. Under the full goodwill method, goodwill applies to all the partners. The rationale is if the retiring partner is paid more than the balance, that means that the value of the firm is more than the worth recorded. So if 20% of goodwill is, we remember Samina's share in the profit was in the ratio of 4:4:2. So that means 20%. So 20% of goodwill is equal to 15,000. We have calculated in the previous example. And so the total goodwill will be 15,000 divided by 20%, and that will be equal to 75,000. And the goodwill will be allocated to all the partners in their profit sharing ratio, that is 4:4:2. And in the second journal entry, Samina's account is settled by paying her cash 15,000 and accepting a liability of 50,000 by the remaining partners. A partner may agree to accept less than their interest for several reasons. He may view the future of the firm negatively. He may need operating capital for personal reasons, or the business association may be no longer acceptable to him. In such cases, use of bonus method is justified. And let us take an example over here. We are making the payment to the retiring partner, and in this case, it is less than the book value. So we have made a slight change that we assume now that Samina's capital is 70,000. Now, we are not making any other change, and suppose the Samina's capital is 70,000 and she decides to withdraw from the firm. Now the amount payable to her will be 75,000, but she is paid 15 plus 50, that is 65,000. Now why I say 75? Because 70 is the capital, and if you remember, when we revaluated the assets, the value allocated to Samina was 55,000 out of 25, and the difference will be recorded as bonus payable to the remaining partner. And let me explain you this. Once again, we have the assets as recorded before. Nabiha's capital is 50, Abdullah's capital is 75, but now the Samina's capital is 70. So obviously the liabilities is the balancing figure, and that is going to be 30,000. The assets has been re-evaluated, and this has been allocated to the three partners in their profit sharing ratio. So the total is 250,000, 30,000, 60,000, 85,000, and 75,000. Now Samina, and if you make the total, The total is 250,000. So assets are equal to liabilities plus stockholder equity, or sorry, the partner's capital. And now Samina is paid cash 15,000, and the firm has accepted the liability of Samina for 50,000, and she is paid, obviously her account is going to be settled by 75,000. Now you can see that the equation is not balanced, and the reason is that we have to increase the existing partner's capital account by the difference. So now let us see what happens. The total is 235,000, and the liability now is going to be 80,000. Nabiha's capital will be 65. Abdullah's capital will be 90, and Samina's capital will be 0. And now if you make the total, the two sides are equal. We record the journal entry. Samina's capital is debit because we are settling her account by paying her cash 15,000, and there is a notes payable of 50, and the remaining balance is going to be shared by the remaining partners in their profit sharing ratio of 50% each. So this brings an end to this video on withdrawal of a partner from a partnership firm. Remember, questioning is the ability to organize our thinking around what we don't know. So if you have any question, then please email me, and inshallah I will reply you back. Happy learning. Thank you so much.